Someone was asking me recently about devaluing the Naira, and as an economist, I think you can help us understand why this even happens to begin with. In the instances where Nigeria has had cause to devalue the Naira against the dollar, what gains did we make? Why does any country devalue the Naira? Let's even understand that from a root cause as a perspective.
Well, most countries in the world have, most certainly, virtually all developed countries have floating currency, right? They're not that, people, there isn't a daily intervention. And I mean, if I'm as a Canadian, if I'm in Canada and I want to travel to the United States or have a need for US dollars, I mean, my bank can do that transaction instantly. There's no discussion with the Central Bank of Canada, the Bank of Canada about what's going on, right? I mean, and of course, the price is set by the market. And in my lifetime, the Canadian dollar has varied from about, I think, a low of 62 or 63 US cents to a high of $1.02. And there hasn't been really any intervention. Part of the reason there's no intervention is because it's self-correcting. So if we have high oil prices and Canada produces 5 million barrels of oil a day, then the currency will start to rise. If the price of oil goes down, it'll start to fall, but that immediately makes other Canadian exports more competitive. So we kind of allow that free market mechanism to work, and it's in a sense self-correcting. I mean, what's happened here is we don't really have a properly functioning market for FX because only one actor controls the supply side, which is the CBN on that. Now, our position has been with other commentators that the Naira should float. We're a highly open economy. We have a huge diaspora, lots of things going back and forth in and out of the economy. And we have a need for things that are made outside of the country. So we have a need for cell phones, we have a need for computers, we have a need for machinery. For example, when Heineken brews beer, I'm their best customer. That machinery would come from Germany generally, even if we're producing the beer in Nigeria. So we're going to have $50-60 billion worth of imports every year for the economy to function, and there's nothing wrong with that. But we also need to have something that we're giving to the rest of the world to be able to generate that. And traditionally, as I said, we thought of it as oil. Oil is no longer working because of the production declines and, of course, the long-term future for it on that. So we need to be exporting something else. But in addition, we also need to be importing capital. And we've had a lot of difficulty over the last period not importing enough capital. As I said, we haven't created this kind of capital sink or carbon sink analogy with the rainforest where people want to put their money and leave it in Nigeria. So for all of these reasons, people don't want to hold the Naira. If they don't want to hold the Naira, we're going to continue to have a weak Naira. We all understand this dynamic.